In today's video, we are going to discuss how to survive and thrive through this or any recession in the future. Before we go deep into our discussion, let us understand what is recession. If you already know what it is, you may skip to the next part. What is recession? And how does it look like? According to Investopedia, a recession is a significant, widespread, and prolonged downturn in economic activity. A common rule of thumb is that 2 consecutive quarters of negative GDP growth mean recession, although more complex formulas are also used. But for understanding, it simply means a significant decline in general economic activity. Unemployment is one key feature of recessions. As demand for goods and services falls, companies need fewer workers and may lay off staff to cut costs. Laid off staff have to cut their own spending, which in turn hurts demand, which can lead to more layoffs. This creates a feedback loop. You may have recently heard about the mass layoffs in big firms like Google, Microsoft, and Amazon. So if the times are hard, what should we do to survive through these times? Let's find out. Have an emergency fund. This is the primary goal that you should have in your financial planning. This fund should cover you and your family expenses for at least a period of 6 months till a period of 1.5 years. The logic behind this time frame is that according to NBR data, the average US recession lasted about 17 months in the period from 1854 to 2020. This fund should also be extremely liquid, giving you easy access to funds if you lose your job or are forced to take a pay cut. Live within your means. Living within your means is simply saying you have enough money to cover all expenses. You're earning more money than you're spending. This allows you to save money for your financial goals, and it also gives you a cushion in case an emergency arises and you need extra cash. Have additional income. Even if you have an excellent full-time job, it's not a bad idea to have a source of extra income on the side. This can be a side hustle, consulting work, or even selling some artwork. Once a recession hits, if you lose one stream of income, at least you still have the other one. You may not be making as much money as you were before, but every little bit helps. You may even come out the other end of the recession with a growing new business as the economy turns up. Invest for the long haul. Investing for the long haul is the best investing strategy for the majority of investors because it not only ensures modest gains but is also less likely to yield major losses. As you can see from the chart, the S&P 500 index and the Sensex returns even after the dot-com bubble crash in 2000, Lehman Brothers crisis in 2008, and the recent COVID pandemic in 2020 bounced back and crossed their previous highs. Be real about risk tolerance. Risk tolerance is the degree of risk that an investor is willing to endure given the volatility in the value of an investment. So before making any risky investments, especially during recession, you should know your risk appetite, because 15% down in your portfolio should not cause you sleepless nights. Risk tolerance and asset allocation are vast topics, and we can have a separate video dedicated to them if there is enough interest. Let me know in the comments. Diversify your investments. You might have heard that don't put all your eggs in one basket. Well, that's true for investments as well. In particular, try to build a portfolio of investment pairs that aren't strongly correlated, meaning that when one is up, the other is down, and vice versa, like stocks and bonds. This also means that you should consider asset classes in stocks and businesses that are unrelated to your primary occupation or income stream. Keep your credit score high. One of the most important things that helps you the most is keeping an excellent credit score. Things like paying your bills on time, keeping your oldest credit cards open, and keeping your ratio of debt to available credit low will help keep your credit score high. Because when there is tightening in the credit market, the thing that will help you the most in getting a loan is that excellent credit score. So let's have a summary of steps we discussed. So that's all for today. We will come up with more interesting discussions in the future. Till then, sayonara.